When people realize how big that money supply is, they're going to start, going to the bank and pulling their cash out and buying gold. If you're Jerome Powell, you're looking over this shoulder and you see the dinosaur in the room. Okay, you look over this shoulder and you see CBDCs.
The other thing that I think that our commander-in-chief, that hurts to say that, is mistaken on is inflation and and the spending that he still thinks is a smart idea. In fact, one of the reporters asked him directly, do you think that your spending agenda should be changed? He's like, no, absolutely not. It's absolutely the right thing. He's clueless. He's clueless. He still thinks that it's a supply chain problem.
How long should Americans expect to face higher prices when they're at the grocery store, when they're at the gas pump? Is this something that they're going to see into the summer, into next fall? And separately, you talk about the importance of the Fed, but isn't that an acknowledgement that you're limited in what you can do? If you're relying on the Fed to make decisions and you're unable to get a Build Back Better proposal through, aren't you simply limited in what you can do to deal with inflation?
Well, look, as you know, Ken, the inflation has everything to do with the supply chain.
He has no idea what's coming, in my opinion, with inflation.
Well, the comment I heard the other day that 80% of the money that's in the money supply was printed in the last year. That's scary because there are a lot of things in the money supply that they don't include in the money supply. And let me give you an example. Bitcoin can be used to buy things, and you can sell things for Bitcoin. So that is currency, and it's not included in the money supply. You've got trillions of dollars spread around the world because we're the world's reserve currency. So it's convenient for hotels or casinos to exchange dollars for whatever the currency is, mostly euros. And so if we lose that status, what's going to happen to all that money? It's going to come flying back to this country, okay? The plane loads that we gave to the Iranians are going to say, hell, we don't need this stuff anymore. Get that on a plane and dump it in Washington. And that's the way it's going to be. Now, what do you think will happen to the inflation when all those dollars come back to this country? When people realize that the money supply is a lot larger because you got all those computer entries from the Federal Reserve. When a bank in New York says, let's say they've been raided by their investment banking partner, and the investment bank lost the bet, and so they raid the capital reserves of their commercial bank, and the commercial bank calls up the Fed and says, hey, we're short our capital reserves by $5 billion. How do they create that? How do they make up for that? Well, it's a computer entry. You're all set. You get $5 billion more dollars to spend. That's all part of the money supply, even though, well, it's not paper, really the money supply is just the currency that's in circulation. No, it isn't. It's all that other stuff. Everything the Fed creates, whether it's debt or money to spend, that's part of the money supply. And when people realize how big that money supply is, they're going to start, going to the bank and pulling their cash out and buying gold.
It's all in the news. Everyone's talking about it. The Fed's suddenly hawkish because they're going to reduce the monetary IV drip into our economy. And somehow that is incredibly hawkish. They're talking about maybe by the end of this year, a 1% increase in the interest rates. And maybe next year, another percent. So 2%. We're talking over 7% inflation. That's using the government's squirrely numbers, right? Not more like 14 or 15 or whatever. That's not enough to stop inflation. And the thought that the Fed can attack that without causing a collapse in the markets, the bond market, the stock market, the housing market.
They are stuck because they'd raise rates at all. We're not able to pay just the interest on the debt. But raising it quarter of a point is going to cause the market to drop.
We're already seeing that.
Yeah, and so we
Just on the talk. He hasn't actually done it yet.
that's right. We went from 36 plus to 33 plus in just talk, and there's a finite amount of money that investors can come up with, and when they start making the shift to things like precious metals or other investment vehicles that take away from Wall Street, things are going to change in a hurry. I mean, already in the housing market, which has been booming, people who sell property and they have an extra $100,000 to invest, they're investing it, which is the wrong thing to do. Let's say you sold an old house and bought a new house, and you have a much higher mortgage. In $100,000 that you can either put into that mortgage or invest, they're choosing to invest it. And that I say that's kind of the wrong approach, because let's say your mortgage is at 3%. It's probably something near that, okay? And you've got $100,000 you can either take off that mortgage and invest in whatever, funds, stocks, bonds, whatever. You need to get back that 3% plus inflation. So if you're not making 10% per year on your money, it's a bad idea. You should have put it into the new mortgage.
If they really wanted to fight inflation, they would have done it already. I think they know that truly fighting and winning this battle is a battle they can't even get into. And they're trying to talk it, trying to keep the markets placated, trying to pull that Powell put out from the markets without it collapsing. And at some point, we'll get a taper tantrum. We're going to get an absolute disaster on our hands.
Okay. Yeah, if you're Jerome Powell, you're looking over this shoulder and you see the dinosaur in the room, okay? You look over this shoulder and you see CBDCs. Do I contend with that or give up and do that? And I think that's going to be driven by world events more than anything else. I think the next G7 meeting is going to be all about digital currencies, because they're all drowning. And the dollar index is based on the euro. 58% euro is the dollar index. They would have already converted to a digital currency because their currency, their money supply, is out of control and has been for years. They cut over to the euro in 2002.
Yep.
And at that time, I think Spain's debt was maybe 300 billion. Now they're like 1.5 trillion. And they have no vehicle to pay that debt. None.
So do you think we'll be following other nations as they rush to digital currencies, or
think
are we going to somehow say, no, we got to take the lead. We got to get out in
Well,
front.
the IMF was supposed to be the intermediary between the United States, the reserve currency, and the rest of the world. And they failed at their job, failed miserably. They also sold off all the gold. So what does that tell you? What are countries buying that gold with? U.S. treasuries.
I think the biggest impact, in my opinion, the biggest impact that's coming with gold and silver is going to be when they have to reverse course. I'm talking about the Fed. When the markets tank, they're going to have to rush in and do the mother of all stimulus and rescue that we've never seen before. And when that happens, the dollar turns over and fails. That's when silver and gold truly break out.
Yeah, I think what's going to happen in 2008, the same dynamic was in place, okay? And it played out in defaults and mortgages.
And we're worse off now than we were then.
We are worse off, but the end result of what happened back in 2008 was the TARP program, okay? Toxic asset buying by the Fed, basically, and by the taxpayers. Taxpayers own all these, out of business buildings and everything else. That's already in place. This time they started with the TARP program, okay? And they may be buying $120 billion in mortgage-backed securities every month, okay, which is $1.4 trillion over a 12-month period, and we're almost there. They've been doing this for a year. That just adds to the debt, doesn't add anything but to the debt, okay? Now, are they hoping that all these mortgages will be, good bets? I don't think so.
Powell is thinking at some point way off in the future we might be neutral. We might be able to reduce the balance sheet. How is that going to happen when they are buying these debts, not on the long end, but on the short end, 90-day T-bills at 1%?
Yeah. That's the thing. I mean,
that's the problem.
Raising the rates can't happen. They may want to do that, but nobody will buy our T-bills. That's the other problem. And
right.
So if you make them more attractive, does that mean more people, more countries are going to buy them?
Still a negative game here.
It's a negative game.
And as inflation goes up, the panic is going to start to happen in the markets. Fed is market driven.
There's not going to be any change until there is panic in the markets. And again, there's a finite amount of investing money. You put all the hedge funds together. What is BlackRock? I heard the other day has under management $10 trillion. I mean, so 3 BlackRocks could bail out the Fed? I don't think so. They're just adding to it.
This is what I see. I see retirees who thought that they were going to be able to live on a fixed income panic and not be able to support any sort of realistic lifestyle. I see millennials and Gen Zs who are not really working, not really concerned about working, because they can make the money in the markets. They can play the day trading game. They can play the crypto game. When that pops, they're going to be looking for work. The unemployment is going to go through the roof.
They won't have any skills to go to work. Take the guys my age, who are under inflation now. Boy, I need to get some more money in here. They'll go down to Walmart. They'll go down to Wendy's. They don't care because these guys have been going to work every day of their lives, okay? So people like that will always find work, okay? Hey, would you like me to shovel the sidewalk after this snowstorm? Oh, aren't you about 80 years old? Yeah, but I'm in good shape. I mean, that's the way they think, There were every now and then, like every 10 years, there's an increase in Social Security, but it's still peanuts. It's still peanuts. And I started working when I was 15. When I was 16, my father said, you got to pay taxes on that money. I said, what are you talking about? And so I'd been paying taxes on that money for 60 years. And I'm not worried about if this place goes out of business. I'll find something to do because I'm not going to go home and do yard work.
Don't let this go out of business, Tim.
No, it's getting worse every day. I mean, every day I come in here, there are 10 messages waiting for me on the answering machine. The ability to make ends meet is getting worse every day. And the people who are preparing for the future are on the right track. But keep in mind, there's like 33% of this public think the president is doing a great job. It makes me think that maybe if I had those sunglasses that Roddy Piper had in the movie, what was it, They Live, I could maybe identify that's 33%.
What's your problem? I said, what's your problem?